Hi, my name is Parag Sanghani, and I am a portfolio manager on the Westwood Salient Energy Infrastructure team. Today, we're going to start a conversation on sustainable energy. We're going to focus on decarbonization and where sustainable energy fits within that framework. We're going to talk a little bit about the capital investment opportunities within sustainable energy, and we're going to talk about some of the diversification benefits of owning sustainable energy in an energy infrastructure portfolio. Decarbonization is really starting to accelerate substantially over the last 6 to 12 months. In 2021, 45% of global emissions had no target for reductions. By the fall of 2022, we've seen that the vast majority of carbon emissions now have some type of reduction target, with only 9% of global carbon emissions having no type of reduction target. In addition to targets being increased, we're seeing regulations actually push for the decline of carbon faster than most industry experts had thought just a few years ago. What that means is that investments in sustainable energy are accelerating. And the IRA Act, which was passed last year by Congress, has helped accelerate spending within the industry. Estimates call for nearly $3 trillion a year to be spent on sustainable energy infrastructure this decade per year. The interesting thing about that statistic is that it will not get us to net zero by 2050, which is the target of the Paris Accords. In fact, for us to get to net zero by 2050, Bloomberg estimates that we need to increase spending by nearly 60%, spending over $5 trillion a year in the 2020s, growing to over $7 trillion a year in the 2040s on sustainable energy just to decarbonize. Looking at where that capital is being spent, we see that the vast majority is going towards low emission fuels or zero emission fuels such as wind and solar. About $1.2 trillion of the $3 trillion that's expected to be spent is going towards solar and wind, while another few hundred billion is going towards biofuels, hydrogen, and renewable natural gas. As the industry grows and as electrification becomes more common throughout the various industries that use energy, we expect capital invested within the industry to generate significant opportunity for investors. Looking forward, we see that investments in sustainable energy could potentially result in great returns for investors, in addition to providing decarbonization for the world economy. In addition to those two facets, we also see that owning sustainable energy infrastructure in an energy infrastructure portfolio can have meaningful diversification benefits. If we look at just the traditional energy infrastructure space, we see that the correlation is 0.25, as shown in the table. Looking at energy more broadly, producers or E&P companies, looking at oil prices or natural gas prices, we see that correlations are essentially zero, or the two industries are relatively lowly correlated. Finally, if we think of where we see the greatest correlation within energy infrastructure or within sustainable energy infrastructure, we see that it is more broadly associated with global listed infrastructure, which has about a 0.4 correlation. Over time, we believe that the high level of capital investment in the industry, coupled with a very favorable regulatory environment, could result in great returns for investors and could provide investors with great diversification within an infrastructure portfolio. With that, I'd like to thank you for your time today and listening to our thoughts on sustainable energy. In the future, we hope to dive into much deeper detail on which sectors we see as being the most exciting within the industry and where the investment returns are really showing up. If you have any further questions, please reach out to your Westwood representative. And thank you.